On October 17th, the European Central Bank cut their main financing rate down to a current level of 3.25%. Now, the move marks the third cut this year and the first consecutive rate cut in 13 years. The move was largely expected, mostly because of the last read of the Eurozone CPI that came in below target at 1.8%. There are some analysts, though, who believe the easing cycle is premature and that part of the inflation picture is an illusion. Now, the headline number reflected rapidly declining energy prices, but both core and services inflation is still running significantly above target. Now, already this month, we've seen a dramatic fall in the euro versus the US dollar, having lost 3.2% of its value in just over 2 weeks. Now, perhaps this explains the euro's casual response to the rate cut. Much of the weakness is based on the belief that the Eurozone is further ahead in its fight against inflation and that the spread between Eurozone rates and US rates will stay relatively wide. Currently, the US Fed funds rate is 4.875% compared to the ECB's 3.25%. Now, market expectations for the Federal Reserve are for 45 basis points more of easing this year, according to the CME FedWatch tool. Now, what's significant is that a persistent pattern has developed in the U.S. over the last year in which futures markets prices in aggressive easing only to remove those eases as time passes by. This was repeated recently as the market was pricing in 78 basis points of 2024 eases just after the initial Fed 50 basis point cut down to its current level of just 45. Now, CME Group offers 3 different size currencies: the standard contract, the mini, and the micro, in order to match a trader up with their preferred risk tolerance. We're going to be using the micros in these examples. If a trader believes the euro could continue lower from here, they could express that by selling the December micro euro futures contract at 1.0864 and target a move to the April lows of 1.0750. A stop for this trade can be placed above at 1.0970. This trade can make $142.50 if the target is reached and risks $132.50 if you're stopped out of your level. Now, if a trader believes that the euro could rally from here, they could express that by buying the December micro euro futures contract at 1.0864 and target a move to the September highs of 1.1240. Now, a stop for this trade can be placed below at 1.0650. This trade can make $470 if the target is reached and risks $267.50 if you're stopped out of your level.